Let's go back to the Bank of Baroda management as well. We were just speaking with Mr. Debadatta Chand, who is the managing director. I'm really sorry for that interruption because it was Prime Minister Modi addressing just before the budget session kickstarts today. But Mr. Datta, just wanted to get back to the point where we left on your NIMs. We have seen a sequential drop, but last quarter there was an impact of the penal interest charges. But what is the way forward, and will you be able to maintain the margin to meet the guidance for FY25?
Yeah, on the margin side, let me be slightly. We said that the guidance for this full year is going to be in the range of 3 to 3.10. So, in other words, it's 3.05 plus minus 5 BPS. If you look at the 9 months, the NIM, it is almost at 3.08. And you said right with regard to the penal charges, the impact is almost 5 to 6 BPS. So, considering that, almost we are in the range that we had given earlier. But one fact is very clear, like the entire market has seen, there is a cost on the deposit which catching up and slightly putting pressure on the margin. It is not true for only Bank of Baroda, it is true for most of the banks like. So in that scenario, I think the bank has quite able to maintain the NIM at almost at 3.08. And for a full year basis, when you look at the outlook, particularly for this quarter, I think the bank would be in a position to maintain the margin at 3 to 3.10 for the full year.
Okay, Mr. Devda, this is Snehi also joining in. Talk to us about some other operating performances, because non-interest income was up this quarter, supporting your overall operating income growth. Do you expect this uptick to sustain in the coming quarters as well? Is this looking sustainable going ahead?
See, there are two components here. One is a core non-interest income, which is a fee-based income, where we have seen a growth of almost 12.6% on YI. A couple of things which again boosted up the non-interest income is treasury income, and also there is one-off item with regard to the interest on the tax refund, almost 330 crore, right? So going forward, we have been always guiding the market that our key focus is to how to optimize on the non-interest income. And if you normalize for last 3 quarters, almost the range that we were achieving, excluding the last quarter where there was a one-off in terms of recovery from TW account, we're able to maintain that. So in that sense, I think for a full year basis, we'll be in a position to optimize on the non-interest income and able to get a operating profit, which again, we said something around 7,500 to 7,800 quarter to quarter, which should be sustainable for the full year also, based on an average of 7,600, 700 crore per quarter.
When I look at your credit cost, that remained low at 0.5%. That's well below your guidance of 0.7%. So is it fair to assume that the cumulative credit cost will remain comfortably below that 0.5% mark, or do you think that some uptick can be seen in Q4?
That is what actually, if you look at the asset quality, it is one of the best quarter we have, where the credit cost is at 0.3. And for a 9 months credit cost, it is at 0.47. So while saying so, the guidance for the credit cost is we said that will maintain below 0.75. So considering a 9 months, I think the operating range for us for the full year would be something between 0.5 to 0.75. So we are quite comfortable looking at the stress book as on today, looking at the output in terms of the slippage and other collection thing. I think we'll be in a position to maintain 0.5 to 0.75.
Okay, also help me understand when it comes to the loan book growth. Now, although that is aligned within the guided range, you had earlier said that you wish to remain at the upper end of this guidance. Now, corporate book growth is also still weak. So, what's your take on both of these metrics, and can the corporate book growth revive in Q4?
Yes, I think so. Reason being, if you look at this quarter growth, the retail continued to grow at almost at 20%. The agri growth is 12.5 and the MSME also at 13.7, which is almost the agri and MSME 200 BPS positive change vis-a-vis the September YY growth. The corporate growth is slightly lower, but a full year basis, we are targeting almost 10% corporate loan growth. Suppose we achieve a retail of almost 20%, MSME agri somewhere between 14% as a combined growth, and also corporate at 10%. I think we'll be exceeding the upper guidance that we have given them to 13%. And the outlook again, Q4 is normally a productive quarter for most of the banks like us. And I think we'll be in a position to achieve the upper band of the guidance. Rather, we'll be in a position to rather slightly surpass the 13% target growth that we have given for the loan side.
All right, and when we look at some of your other numbers then although your asset quality is quite healthy, so can you tell us that how much of your total book is under unsecured segment and what are the asset quality trends you are seeing in this particular segment?
See, the personal loan, secured personal loan book is almost 32 odd thousand crore for us. And if you look at the trajectory of this particular portfolio, the growth earlier, maybe a year back, was almost at 60-70%, and current year, for all 4 quarters, we have significantly moderated in the segment. The YY growth for December is almost 24%. So in between, a couple of things that we have done for the book is to clearly strengthening the underwriting quality therein. So the new book that we are creating is a much better underwriting in terms of standard, having a much more focus on the salaried class, good CIBIL score. So I think based on that, as the book is not significant, I was very comfortable growing in this segment almost at 25%. And in terms of slippage and all, although there is a bit of elevated slippage, but that is insignificant in terms of my overall slippage. Like that clearly in terms of GNPA, the retail GNPA is at 1.6. So we were not very in terms of the growth guidance, continue to grow in the segment, maybe at a pace of around 25-30%. But at the same time, clearly focusing on the underwriting quality in the retail unsecured personal loan book.
Chand, thanks so much for joining us on ET Now and sharing your earnings fine print with us. On that note, we'll let you go and good luck for the next quarter.
If you like this video, then like, share and subscribe to ET Now.